You know the feeling, right? If you've tried to buy a house or even just rent a place recently, you know that prices are just through the roof. And it's only natural to start looking for a villain. For a lot of us, that villain is the corporate landlord. The big Wall Street firms buying up whole neighborhoods. But is that really the whole story?
It's the question that's on pretty much everyone's mind. Are these huge, faceless corporations swooping in, outbidding regular families, and then jacking up the rent for all of us? It's a really powerful story, and it's definitely one that's gotten the attention of people in Washington.
So much so that there's a new bill in the U.S. Senate, and one part of it is literally titled, "Homes are for people, not corporations." It's designed to stop these big firms in their tracks. But here's where it gets interesting. A new report from Realtor.com decided to actually crunch the numbers, and it asks a really important question. What if we're all pointing our fingers at the wrong culprit? Okay, so let's start with the proposed solution. This bill goes right after what it calls institutional investors. The thinking is pretty simple, right? If you stop these guys from buying up so many houses, then there'll be more left over for everyday people. And maybe, just maybe, prices will start to come down.
So who exactly are we talking about here? Well, the law has a very specific definition. An institutional investor is any company or entity that owns 350 or more single-family homes. That's the group this bill is trying to limit. Now, I want you to remember that number, 350 homes, because it's going to be really important in a second.
All right, now for the reality check. Let's see what the data actually tells us about these big buyers. This is where the story we've all been hearing starts to get, well, a lot more complicated. Realtor.com looked at a whole decade of home sales to see how big of a footprint these giant landlords really have across the whole country.
And here it is, the big number. Over the last 10 years, those institutional investors, the ones owning more than 350 homes, they accounted for just 1% of all single-family homes bought in the entire United States. Seriously, just 1%. That is a way smaller slice of the pie than most of us probably imagined.
And what's really wild is the trend. Even if you only look at homes bought by investors, the influence of these mega landlords is actually shrinking. They hit their peak back in 2021, making up about 16% of investor purchases. But since then, their share has been more than cut in half, dropping down to just 7.5%.
Jake Kreml, one of the economists behind the report, he puts it really bluntly. He says this ban is going after a trend that's already on its way out. The data is basically showing that we're reacting to what the market looked like a few years ago, not what it looks like today.
So if the corporate giants aren't the main players we thought they were, who are the real investors buying up so many homes?
Well, the data flips the whole picture on its head. It turns out small investors, we're talking people who own fewer than 10 homes, they are by far the biggest players. They make up more than half of all investor buys. When you add them to the medium-sized investors, they absolutely dwarf that 12% share from the big institutional firms this bill is targeted.
And just to zoom out even one more level, look at this. Over the last decade, all investors, big and small, bought about 5.5 million homes. But regular home buyers, they bought 58 million homes. That means all investors combined make up less than 10% of the entire market.
Okay, so I know what you're thinking. If their national impact is that small, why does it feel so huge? Why do we see all these stories? Why is everyone so angry about these companies? Well, the report has a really good answer for that too.
And it all comes down to one word: concentration. This isn't happening evenly across the country. No, this institutional buying is packed into just a few places. Get this, the top 10 metro areas for this stuff account for over half of all the homes these big companies have bought nationwide.
And here they are, the hotspots. In places like Memphis, Charlotte, and Atlanta, the share of homes being bought up by these big investors is 3 or 4 times higher than the national average. So if you live in one of those communities, their presence feels absolutely enormous. Because, well, it is.
And the report's author connects the dots perfectly for us. He says that visceral reaction people feel is totally real and completely understandable. In their specific neighborhood, they really are seeing a massive change. But, and this is the key, he stresses that this intense situation is the exception, not the rule for the rest of the country.
So, let's bring it all back to the main goal here, making housing more affordable. If this law gets passed to ban big investors, is that actually going to fix the problem?
The report's conclusion on this is pretty direct. A ban like this is almost certainly not going to be the silver bullet that we're all hoping for. Sure, it might make a small difference in a few very specific neighborhoods, but it's not going to solve the nationwide affordability crisis.
And their logic is laid out in 3 really simple steps. 1,
The group they're targeting is just a tiny piece of the national market. 2, their activity is all bunched up in just a handful of areas. So 3, a nationwide ban just won't be able to move the needle on prices for most Americans.
So if banning buyers isn't the real answer, what is? Well, the report suggests the actual problem isn't who is buying, but the fact that there just aren't enough homes to go around in the first place. They argue that real solutions mean tackling that supply shortage, through things like zoning reform and, you guessed it, just building a lot more homes.
And that leaves us with this final massive question. The data seems to suggest that focusing all our energy on a single villain, while it might feel good, could be distracting us from the much harder, much more complicated work of solving a basic supply and demand problem. Maybe the real challenge isn't stopping certain buyers, but building a country where there's actually enough for everyone.